The markets are buzzing, Bitcoin is pushing new highs, stocks are showing signs of life. But a sense of caution lingers. Investors are bracing for key economic data. The CPI report could make or break the current rally. It's a delicate dance between optimism and uncertainty. May 7, 2025 has been a day of mixed signals. The S&P 500 closed down 0.84%. The tech-heavy Nasdaq fared slightly worse, dropping 0.92%. The Dow Jones Industrial Average followed suit, shedding 0.99%. The upcoming CPI report has investors on edge. Inflation remains a concern. Despite the pullback in equities, the overall sentiment is not entirely bearish. There are pockets of strength in the market. Bitcoin, the leading cryptocurrency, continues its upward trajectory. Certain stocks are also defying the downward trend. This suggests that investors are still willing to take on risk, but they are doing so selectively. The question on everyone's mind is, will the bulls maintain their grip, or will the bears stage a comeback? The answer likely lies in the economic data released in the coming days. Buckle up, investors. It's going to be an interesting ride. Bitcoin is on fire. The digital gold is closing in on a major milestone, $100,000. The recent surge has been fueled by a confluence of factors. Progress in US-China trade talks has boosted risk appetite. Institutional adoption of cryptocurrencies continues to grow. And then there's the fear of missing out, or FOMO. On May 7th, Bitcoin briefly surpassed $97,000. This surge was driven in part by news of potential tariff adjustments between the US and China. The optimism surrounding these talks has spilled over into the crypto market. Bitcoin, often seen as a risk-on asset, has benefited from this positive sentiment. However, Bitcoin's journey to $100,000 is not without its hurdles. The $98,000 level has proven to be a significant resistance point. Profit-taking near this level has tempered Bitcoin's upward momentum. Analysts are closely watching to see if Bitcoin can close above $95,000 on a daily basis. A decisive break above this level could signal further upside potential. The coming days will be crucial for Bitcoin. A successful push past $100,000 would be a major psychological victory for the cryptocurrency. It would solidify its status as a digital store of value, and it would likely attract even more investors to the space. Stay tuned. While Bitcoin grabs the headlines, Ethereum is quietly making its own moves. The second largest cryptocurrency is often overlooked, but some analysts believe it is significantly undervalued. Ethereum's price has been steadily rising. It is currently trading around $1,827. Several factors suggest that Ethereum is poised for further growth. One key metric is the accumulation of ETH by large holders, known as whales. These entities are betting big on Ethereum's long-term potential. They are accumulating ETH at an increasing rate. This bullish accumulation trend suggests that those in the know are confident in Ethereum's future. Ethereum's value proposition extends beyond its use as a cryptocurrency. It is also the foundation for a vast ecosystem of decentralized applications, or dApps. These dApps cover a wide range of use cases. From decentralized finance, or DeFi, to supply chain management, Ethereum is powering the next generation of the internet. As the Ethereum ecosystem continues to expand, the demand for ETH is likely to increase. This could push the price of ETH significantly higher in the coming months and years. While Bitcoin remains the king of crypto, Ethereum is emerging as a powerful contender in its own right. While the broader market showed signs of fatigue, certain stocks defied the trend. Hims & Hers Health, a telehealth company, surged by an impressive 18.12%, closing at $49.47. Upwork, a freelancing platform, wasn't far behind, posting an 18.02% gain to reach $15.72. Hims & Hers has benefited from the growing demand for telehealth services. The COVID-19 pandemic accelerated the adoption of virtual healthcare. Hims & Hers capitalized on this trend by offering a convenient and discreet way to access healthcare from the comfort of home. The company's focus on sensitive health issues such as hair loss and erectile dysfunction has resonated with a large customer base. Upwork, on the other hand, has tapped into the rise of the gig economy. More and more people are choosing freelance work over traditional employment. Upwork provides a platform for freelancers to connect with clients worldwide. The company's recent success suggests that this trend is here to stay. Section 5, macroeconomic forces at play, trade talks and CPI looms. The market's cautious optimism is not solely driven by company-specific news. Macroeconomic factors are also playing a significant role. The ongoing US-China trade talks have injected a dose of optimism into the global economy. Progress in these negotiations has the potential to boost trade and stimulate growth. US Treasury Secretary's trip to Switzerland for trade talks with Chinese officials is a positive sign. Both sides have hinted at the possibility of tariff adjustments. A breakthrough in these talks could have a ripple effect across global markets. However, uncertainty remains regarding the upcoming CPI report. Inflation has been a persistent concern for investors. A higher-than-expected CPI reading could reignite fears of inflation. This could lead to a pullback in risk assets, including stocks and cryptocurrencies. The market is in a delicate balancing act. Positive news on the trade front is counterbalanced by concerns about inflation. Section 6, the week ahead, earnings and inflation data in focus. The coming days will be crucial for market watchers. A slew of tech earnings reports will be released. These reports will provide insights into the health of the sector. Strong earnings from tech giants could boost investor confidence. Disappointing results, on the other hand, could trigger a sell-off. The CPI report, scheduled for release later this week, will be another key event to watch. As mentioned earlier, this report has the potential to move markets. A higher-than-expected inflation reading could spook investors. This could lead to a flight to safety. Conversely, a benign CPI report could give the bulls the green light to continue pushing higher. The interplay between these events will likely determine the market's direction in the near term. Investors should brace for volatility. Buckle up. It's going to be a bumpy ride. Section 7. Navigating the volatility, a balanced approach. Volatility is an inherent part of the market. It is especially pronounced in times of uncertainty. The current environment is a case in point. Investors are grappling with a confluence of factors. These include geopolitical tensions, inflation concerns, and the ever-evolving regulatory landscape. In such a volatile environment, it is crucial for investors to maintain a balanced approach. This means avoiding emotional decisions and sticking to a well-defined investment strategy. Diversification is key. Spreading investments across different asset classes can help mitigate risk. It is also important to stay informed. Keep abreast of market developments and economic data releases. This will help you make informed investment decisions. Remember, volatility can present both risks and opportunities. By staying calm, informed, and diversified, you can navigate the ups and downs of the market and come out ahead. Section 8. The future of finance, a converging landscape. The lines between traditional finance and the world of cryptocurrencies are becoming increasingly blurred. Institutional investors are dipping their toes into the crypto waters. Cryptocurrency exchanges are launching products and services that resemble those offered by traditional financial institutions. This convergence is likely to continue in the years to come. As the cryptocurrency market matures and becomes more regulated, it will become increasingly attractive to institutional investors. This influx of capital could further fuel the growth of the crypto sector. The rise of decentralized finance, or DeFi, is another trend to watch. DeFi platforms are using blockchain technology to offer a wide range of financial services. These services include lending, borrowing, and trading. DeFi has the potential to disrupt traditional finance by offering greater transparency, accessibility, and efficiency. The future of finance is likely to be a hybrid one. Traditional financial institutions and cryptocurrency companies will coexist and compete. The winners will be those who can adapt to the changing landscape and offer innovative products and services that meet the needs of a new generation of investors. Stay tuned, the future of finance is being written right now.